Ladies and gentlemen, we had a pretty disgusting week in the stock market, if I do say so myself. And in this video, I'm going to show you guys part of my portfolio and show you guys how much that account is down, because it did go down a pretty good amount. I'm also going to tell you guys, what is going on in the markets and my future predictions. So I hope you guys enjoy this one. Make sure to leave a like, subscribe if you're new, do all that fun stuff. And let's get right into the video. Enjoy. Aside from my soul. Alright, so first of all, if you guys are brand new to the channel, I do want to say welcome. That's the first thing. But also, if you guys are brand new in this channel, I post videos on personal finance, investing, stocks, tax related videos, and then maybe later this year, we're gonna do videos on real estate. So if you guys want to see any of that, if you guys enjoy learning about money and how to make money and how to grow your money, you guys should definitely tap that subscribe button because you don't want to miss out. Let's talk about the format of the video first. So number one, I'm going to be talking about, what's going on, what caused the crash. It's not really a crash, it's more so a correction, but we're going to be talking about, what caused this. Number two, we're going to be talking about my future predictions, what I predict and what I'm doing as well. Number three, I'm going to show you guys my portfolio and how much it went down because it did go down, unfortunately. And number four, I'm going to give you guys some words of wisdom on how to get through this market, as a random guy in the internet wearing a black t-shirt with a white desk. So, I think I'm pretty credible. Alright, so section one of the video, what in the world is going on in the stock market? And by the way, if you guys don't know what's going on, open up your Robinhood, your Webull, whatever you guys use to trade, and then you guys will see, what's going on in the market and why I'm making this video.
This is how I press it. What the fuck?
Okay, so now that you've seen your accounts and I've seen that they're all red, you guys might be saying, what in the world is going on? And that's a great question. There's one term that you guys need to know, and that is a bond. Now, what is a bond? Think of bonds as a really safe investment, kind of like a savings account. So institutions and companies will put their money into a bond to preserve it from inflation, and typically they get 1%, 2%, or a 3% interest rate. It depends on the bond, and it's also for a fixed amount of time. So maybe it's a year, maybe it's 5 years, maybe it's 10 years. So again, think of these as very safe investment. Now, back in February, a lot of companies had money in bonds because the market was at all-time highs, and after the crash happened, guess what? There was a transition. A lot of companies switched their money into the stock market, into riskier investments, and as a result, we saw the V-shaped recovery. But of course, that wasn't the only thing that caused the V-shaped recovery. There was also other things. For example, there was more clarity on the Rona, and you can't forget about the stimulus packages. Now, fast forward 1 year, and again, we're seeing the stock market at all-time highs. And guess what? There's another shift happening from tech stocks into recovery stocks and also into the bond market. So I hope that gives you guys a little bit of background and helps you guys understand a little bit more, what's going on. But with that said, we're going to move on to the top 3 reasons. Number one is the 10-year treasury rate is connected to interest rates. So as the 10-year treasury rate increases, interest rates go up, mortgage rates go up, and obviously the stock market, well, as of now, doesn't seem to like that. Number two is somewhat related, and that is a fear of inflation. Now, you would think that because of inflation, this would be a good thing for stocks, but it actually isn't in the short term, but in the long term, we're going to be fine. And number three is the V-shaped recovery. I mean, let's be honest, we saw this coming. Stocks don't only go up, they have to come down, they have to correct themselves, and this is a healthy pullback. And I guess with that said, that kind of leads me into the next section of the video is my prediction. What am I going to do? What do I think is going to happen? But do take all of this with a grain of salt because, after all, I'm just some random guy in the internet on your screen with a black shirt and a white desk. Okay, so the best way to make a prediction is to look at the historicals. I've always done this, when it comes to stocks, always look at the historicals. And in this case, we're going to be taking a look at the 10-year treasury rate as well as the SPY. So let's take a look. I'm going to put the graphs right there so you guys can take a look at that. But those graphs are actually the first week that we saw that first pullback. So that was the first week. Now we're going to take a look at the second week. I'm going to put the graphs right there. If you guys see any patterns, again, let me know in the comment section below. And we actually do have a pattern. It's an inverse pattern. So when the 10-year goes up, the stock market actually goes down. And then when the 10-year goes down, the stock market goes up. But if we look at Friday now, it actually broke that pattern. So, we did have a pretty major downward fall. So in theory, we would see this demonstrated on the 10-year rate. There would be a kind of like an inverse triangle, but that's actually not the case. And the point that I'm trying to make here is that they're not connected anymore and that they broke the pattern. Now, what does that mean? Now, it could be either or, it could be a good thing, it could be a bad thing, it could be a neutral thing, who knows? But I personally think that the fear of inflation, the fear of rising interest rates is already priced in. And I don't think it can get much worse. So I am filming this on Saturday, so the stimulus was just passed earlier today. So that's definitely going to help the market in my opinion. There's obviously pros and cons, but I do think that the stock market is going to have a positive reaction to that. On Monday, Monday through Friday, I do think we're going to be pretty bullish. I do think that the market is going to be green. And I guess with that said, that kind of leads us into the next next section of the video, which is my portfolio. So let's go ahead and take a look at that. You guys can see the value of this portfolio is currently worth $42,409 with 33 cents. You can't forget about the cents. And that is actually not what I put in. It's actually lower. So can you guys guess how much money I put into this account? Put in the comment section. I'm curious to see if you guys can guess it. The total amount that I put in is $51,000. So $51,000 cash that I put in. So I'm currently down 8 grand, but that's fine because I'm not in it for the short term, I'm in it for the long term. So let's take a look at it right now. Why not? Let's look at the week. In the week, I'm down 8,900, which is around 17%. In the month, I am down 7 grand, almost 8, which is around 15%. In the 3 months, we are down 8,000, which is around 16%. So you guys can see here that I started this account with around 51. You guys may have seen my last video, or not my last video, but my previous video where I showed my portfolio. I actually did take that money out just because I wanted to, do something with it, but I did start putting it back in, and you guys can see here that if we look at the year, that's the reason I didn't, have any movement there. But then after January 16th, I believe, we started seeing movement because, that's the time that I started depositing more money and started buying stocks. All right, the first stock that I did trade was Ocugen. So this was the reason for the first spike. You guys can see that I went from 50 to around the new base, 56,057. And then after that, I did make another trade, which was pretty successful as well. And that was Palantir. And I think I made around 2,000, 1,500 around there. I don't remember quite how much it was because I did, gradually sell out. But you guys can see that at its highest, I was around $63,000, which was up 25%. I was up $12,000. This was on Friday, by the way. And then after that, you guys know what happened next. Monday came around, and Monday was a bloodbath. You guys can see that, after Monday, which was the 22nd, it went down to around $51,000, which is insane, right? Because that had never happened before. So it went back to the same level as I was with my cash. Here we have a new base of $51,000. And what we saw this past week was an even bigger dip, but then we had that V-shaped recovery and actually just gradually tapered off. So that was good. We ended off the week with $42,000. And if I'm being transparent, I do have a margin call right now activated on my account, but I only have to deposit $700 to clear that off. $700, I can do that this weekend. That's totally fine. And the only reason I got into margin was because I actually had some money coming in, so I knew that I had that money available and that I was going to deposit that anyways. So I just got into margin because, again, I knew that I could pay it off. But anyways, we're going to take a look at the stocks that I do have right now, and a lot of them are down. Well, practically all of them are down. All right, so the first stock that we have here is GHVI. It's actually a SPAC, and it's going to be merging with Matterport. Now, they haven't officially released it, which is why I like this stock. And maybe I'm a little bit biased because, I've been in the construction industry and I want to get into the real estate industry, and they create 3D cameras where they're applicable to both of those industries. If you guys want me to do a video on this stock, let me know in the comment section. But if I had to recommend one, not financial advice, I would recommend this one. So right now I have 1,268 shares of this stock at an average cost of $15.01, and it's currently worth around $18,000. Okay, so the next stock is SFT. Now I have 1,600 shares at an average cost of $9.32. That's fine. I'm not planning to sell that anytime soon. This is going to be a long-term position. Then the next stock that I have is NIO, 79 shares. You guys know NIO. I have an average cost of $56.89. The next stock that I do have is NNDM. It's 500 shares at an average cost of $14.44. And then the last stock that I have is EBIX, and I have 570 shares at an average cost of $30.52. Now, I actually got into this one on Friday before the market opened, before the market closed. And, on Monday, well, you guys know what happened on Monday. Everything was red, and this was no exception. So that was my account. I hope you guys enjoyed that. Again, this was only one of my portfolios. If you guys want to see all of my portfolios, let me know in the comment section below. I'll do a whole updated portfolio review if you guys want to see that more in depth. So with that said, we're going to move on to the last section of the video, which is the words of wisdom.
What do you think the meaning of life is?
To live in a mystery and to find purpose and to live in the now. Now.
Alright, so that pretty much sums up everything in this video. If you guys have any comments, questions, concerns, love stories, let me know in the comment section below. But I hope you guys enjoyed the video. Make sure to leave a like, subscribe if you're new, do all that fun stuff. And I'll see you guys in the next video. Peace out.
Aside from my soul.